Hi, believers. This is Nishant from the Waya team. In the previous month, we mentioned that 26,300 is a level where a cycle ends, post which we have seen a good correction of 7% in Nifty. It was necessary and required because the prices were stretched and the valuation were also expensive. Adding to this, the earnings from many large companies are not impressive, whereas small cap companies have posted good earnings. Such a situation clearly tells us that the markets are going to be stock specific. Let's go through the charts and try to understand what can possibly happen in the month of November and how an investor or trader should place their bets. Starting with the Nifty, after a breakdown from a head and shoulder pattern, the index is trying to take support at 24,000 levels. Although the pattern target comes at 23,300, 23,900 is an important support level for multiple reasons. First is that the index took support during the panic selling of yen carry trade. And at the same level, the index has a Fibonacci support on weekly and monthly cycles. If we break 23,900, then we are heading to 23,300, which is again a level we witnessed during the election result day. In our view, we should consolidate in a range for a couple of months. Do keep in mind that on 5th November 2024, US presidential election results will be announced, and we are going to witness volatility. We believe if the market corrects, it will be an opportunity to add quality stocks. Moving to CNX 500, similar to Nifty, the broader index has also made head and shoulder pattern. A breakdown of the pattern is giving us target of 22,000, which also coincides with the election day's top. The pattern target is 2% below the recent low and 4% from the current level. Therefore, I believe we have seen the major pain and the consolidation may start. Another pattern in making is a bigger head and shoulder. And we have already formed the left shoulder and the head. Now, if we make the right shoulder with the pullback and a break of the neckline, then we are in serious trouble. We will be tracking closely if the index is forming the right shoulder or not. But for now, we are entering into a consolidation phase, which will be in a broader range. Moving to mid and small caps, similar developments are taking place in both the indices. The upper chart is the mid cap and the lower chart is a small cap. If you notice that even the mid cap is forming an head and shoulder pattern, whereas the small cap has already formed a head and shoulder pattern, but it has defied the pattern. The reason being the earnings have been better compared to the larger companies in the small caps. Therefore, in both the cases, we believe that we may continue to consolidate. The Bank Nifty index is trading in an upward channel with a lot of choppiness. The index has formed a head and shoulder pattern in which right shoulder is in process. The neckline is at the level of 50,000. A break below this, we may reach 48,000 or 48,500. Please remember 48,000 is an important level for the Bank Nifty to change its trend. Till it doesn't break 48,000 level, we continue to remain bullish. Moving to Pharma Index, after a strong run, the index is taking a pause for the next leg of rally. Please keep a track of 22,000 level as a break below this level can disturb the momentum. In our view, the pharma stocks continue to remain buy on dips. Moving to IT index, the index is taking resistance at 0.618 Fibonacci retracements. Although we are positive on the sector, the valuation of the large IT companies are not favorable. Therefore, we are seeing some cool off here. The next support for the index is at 38,500. Focus on mid IT companies with good results and growth guidance. These are the only sectors which are looking favorable for now. However, the valuation in pharma and IT are not favorable. Hence, one needs to be stock specific. The other indices like auto, metals, FMCG, and realty are in consolidation. Therefore, there are no major developments over there. Moving on to the conclusion, the benchmark indices have finished major part of the correction. The earning season so far is not good in the large caps, whereas many small cap companies have outperformed large caps in earnings. With the US presidential election results on 5th November, do expect some volatility in the coming week. Our sector preference remains banks, pharma, and IT, but I request to be stock specific. We are probably entering into a phase of consolidation till there is a visibility of improving earnings or the comfort in the valuations. At Vaya, we make our best efforts to keep you informed about markets through a weekly bite and sectoral update. Thank you and good night.